Investors are keeping an eye on what the big banks have to say about where to invest in 2025. Here to break down Goldman Sachs' three biggest stock picks for 2025 is MarketBeat analyst Gabriel Osorio-Mazzilli. Gabriel, so good to have you on the channel. Now, you have some personal experience working with Goldman Sachs, right?
Yes, I worked at the firm for about 2.5 years.
Wonderful. Now, this report came out back in November. Lots of people have kind of digested all of the information that came out in that report. Talk about just an overview of which sectors Goldman Sachs expects to see a lot of action happening in 2025.
A lot of investors, as you said, watch it at the end of the year to get a pretty good picture of what to expect in 2025. Now, Goldman Sachs thinks that what you should expect is manufacturing stocks, energy stocks, and net exporters, like domestic manufacturers in the US, to outperform every other in 2025.
Well, you have three picks for us today, three specific stocks that Goldman Sachs expects to have a really good return this year. Let's start with your first company.
Yes, so I picked Boeing out of this list because Boeing is a net exporter in the manufacturing sector, and it is connected to the bazooka stimulus that is happening in China right now. They just landed a contract with the nation's aviation sector, which they expect to grow at about 5.2% in the next 10 years. That is a massive tailwind that analysts are now recognizing in their price targets or EPS projections. And you can see it through a bunch of institutional buying lately. And as far as how the stock has performed as relation to its 52-week high.
So Boeing expected to have a good year. It does make sense with the amount of demand for air travel and other companies looking to buy new planes. But Boeing also had a really kind of difficult 2024 with different headlines. Not so positive news for the company last year.
Right, and that comes with the territory of being one of the monopolies in the industry. There's only Airbus and Boeing, but what happens is when bad news come in, the stock price got so low that any ensuing news that might have come out are already priced in. And you can see it through the volume analysis and the institutional buying that came in recently in the quarter.
Yeah, so it feels like this stock has already reached a bottom. Do you see only up in 2025 for Boeing?
I see it, Goldman Sachs implies it, and a lot of analysts as well through their price targets are signaling double-digit upside in Boeing.
Let's move on to your second pick out of the Goldman Sachs report.
Yeah, so for this one, I want to mention Chevron, not only as an energy play mentioned by Goldman Sachs, and also a sector that Warren Buffett is very fond of right now as he acquired 29% of Occidental Petroleum, but also because it is a net exporter. It's an international energy play that also has double-digit upside. It does have more momentum than Boeing since it trades within the 95 to 93% of 52-week highs, making analysts more comfortable boosting it in the future.
So, Gabriel, what makes Chevron really stand out? Because it feels like the whole oil sector seems to be doing really well right now.
Yeah, well, Chevron, like I mentioned, is the international play here. Well, you have Occidental being more domestically focused or Transocean being focused in the drilling sector. Chevron has exposure to the growth in global oil demand, such as Chinese 3-month expansion in manufacturing. Since China is 40% of global oil demand, I think Chevron is going to be riding that tailwind all the way into 2025.
Well, let's talk about getting into this stock right now. What will it cost investors to get into Chevron today? And how far do analysts think this stock could go in 2025?
You could buy the stock right now at around $155 a share, which at 93% of its 52-week high is still very bullish. But analysts still think that it could grow up to 175 a share on a consensus price target. That's about 13% upside, with the highest coming from the UBS group as recently as December.
All right, so Chevron is your second pick. Your third pick in the list of stocks from the Goldman Sachs report is another very familiar name for investors.
Yeah, so the third name in this list is coming through Intel stock. It's part of the semiconductor industry, which has been the hot issue since 2024. But going into 2025, this one has a lot more upside than your favorite names. It's been part of the domestication of the supply chain and chip making, and it's been the subject of most of the funding in the CHIPS and Science Act.
Yeah, it hasn't been the biggest player in chip stocks so far. What makes Goldman Sachs think that this company is going to see a lot of growth in 2025?
Well, as they did mention, most of the equity markets have a lot of tail risk at the moment. And at 38% of its 52-week high, Intel pretty much has all the downside priced in, which is why analysts see a double-digit upside from here.
That's a very good point. And let's get to that price point. Where is Intel trading right now? And then where analysts think this stock could go in 2025?
Yeah, so right now the stock could be bought at around $19.20. The consensus price target is for $29 and change, which is about a 62% upside from where it trades today. Now the high is a bit bold. They're projecting for $62 a share, which is a near triple on your money. And to me, this means that the domestication, right, of the supply chain in semiconductors is going to play right into that net exporter thesis that Goldman Sachs has given out.
That is a really interesting pick, and it will be interesting to see if Intel does reach some of those big returns that some analysts are predicting. Gabriel, thank you so much for the list of stocks for our investors to think about today. You can watch more of our videos right here on marketbeat.com. Thanks again for joining us today, everyone. And as always, happy investing.